I'd like to welcome you to the insurance series, a series of free webinars giving you the insight into what insurance is and what kind of cover you may need. Now, today is part 2, and we will be discussing life insurance. But before we start, please do allow me to introduce myself for those of you who haven't been on any of my webinars before. My name's Michael Christophis, and I'm a senior associate at Holborn Assets. I've been giving advice to expats for over 15 years on their finances and protecting their futures. Whether that may be with investments, savings, or insurance, I'm here to help. Now, today I have with me another Michael Smethurst from Atlas Life. Michael, do you just want to introduce yourself a little bit?
Yeah, sure. Thanks first and foremost for the invite, Michael. I am based in Asia as well. I've worked in the industry for, approaching 20 years now. My job within Atlas Life is I'm the regional manager for Asia. And the company that I represent, Atlas Life, we specialize in term life insurance solutions that are not just designed at the expat market, but designed at the expat market, the high net worth market, and also internationally mobile clients that might struggle to find suitable life insurance products wherever they may be based.
Great. Now, as you all know, today we will be discussing life insurance. There will be a live Q&A at the end. So if you do have any questions at all, please just click the question box and type them in there and we will answer them all. No one else can see who's asked. So please feel free to put anything else in, any questions in there that you do want. Right, let's get into it then, Michael. Let's start easy. What is life insurance?
Okay, so essentially life insurance is a financial contract between a policyholder, which would be yourself, Michael, and a life insurance company. In exchange for a policyholder settling premiums on a monthly, quarterly, or annual basis, the life insurance product provider will guarantee that in the event of a policyholder dying, a predetermined lump sum of cash will be sent to the policyholder's beneficiaries. Beneficiaries can be anyone. Beneficiaries generally tend to be husband or wife or children, but they can be a business partner or that type of, if it's of course a business or a key man or business protection policy. Now, obviously, unexpected events can create gaps in people's finances, and the core purpose of life insurance is protection. If a family's income stream is turned off, then essentially the life insurance or the lump sum benefit of life insurance is designed to bridge those gaps and to, help that family's financial future going forward.
Now, you mentioned there it could be a business partner or someone else
Sure.
that you could leave it to. So what types of covers actually are there out there when you're talking about life insurance?
Sure. Okay. I mean, there are several different markets for life insurance. You have the onshore market, which typically will service, say, if ties in Thailand. You have the offshore market, but then you also have, niche markets like, high net worth clients that also, seek suitable products for protection purposes. Now, regardless of whether you're looking at any of those markets, the products can actually be labeled into two distinct categories, and that's term insurance and whole of life cover. If we start with term, because that's obviously my speciality, term insurance generally tends to be cheaper because you're taking cover for a predetermined level of time. Now, it might not be as sexy as other products out there. And what I mean by that is there's no investment side to it. It is just straight up insurance. But regardless of what you're looking to create or the solution that you're looking to plug with insurance, you can do it with term. So as I say, for a business owner that has a key man that's vital or critical to their business, you can take key person cover out. Key person cover generally tends to be maybe a 5, 10 or 15 year term. So, term insurance is absolutely perfect for that. If you have a mortgage, a majority of the time, if you're taking out a mortgage and you're based in your country of origin, you actually have to take a level of life insurance before a bank will actually provide a mortgage for you. In the offshore market, we can actually offer a decreasing term product. Decreasing term product, again, is perfect because term life insurance offers a huge amount of flexibility. So as you're paying off your, parts of your mortgage every year, we can actually reduce the amount of cover that you've paid. So let's just say, for example, your mortgage is $300,000. You pay 25,000 off over the course of a 12-month period. Next 12 months, we actually reduce that level of cover from 300 to 275,000. So you're actually, reducing your costs, and you're making it fall in line with the actual cover that you need. For estate planning, if your family is in a position where estate planning is required, and obviously, dependent on your nationality, is going to have a big impact on whether estate planning is necessary for you. But joint life second death policies to age 99 are absolutely perfect, and they're front and center, regardless of whether you're looking at high net worth, you're looking at the onshore market or the offshore market. And also simple family cover. It's perfect for that. If you need protection for the next 20 or 25 years, then it's a low-cost product that fulfills the design brief. Now, if we go back to the whole of life option, the whole of life option, as I said, tends to be more expensive because it's permanent cover. It's there in the title, whole of life. It's going to protect you, for the rest of your life, of course, as long as you keep paying your premiums. Now, on the retail side of things, what generally tends to happen is the structure of the premiums are slightly different. A whole of life product will have an investment side that's also sat next to the insurance. Some of your premiums are going to fall inside the insurance, and some of the premiums are going to fall inside the cash account, is what we would call it. Personally, and of course I'm going to say this because my company specializes in term cover, but I think at the retail level, all you're doing with that type of policy is diluting the effectiveness of the policies. So for your life product, you've got a life insurance product that's zero amount of flexibility. And on the investment side, you've got a limited amount of viable products that you can actually sink your money into. So the growth might be limited. Obviously, as you work your way up your food chain, you do have hybrids that sit in there, which does have, incredible amount of flexibility, and also, open architecture when it comes to where you can actually park your money. Typically, those are VUL, Universal Life, PPLI. However, these are actually aimed at high net worth clients. So the entry points to access these products can price a majority of, your typical expat families out.
So from here in Asia, though, and also in Thailand, term life insurance generally stands out a little bit more than the whole of life. Why is that? What makes it more appropriate?
Well, I think if we just actually look at the market and not necessarily look at the products, I actually think that, international clients or offshore clients or expat clients have become a lot more sophisticated over the course of the last 5, 10, 15 years. Fortunately, the industry has evolved with it. Product development has been absolutely solid in the life insurance sector, and expats are no longer restricted to products that don't necessarily fulfill what they want out of a product. Competition between providers is always great for a consumer, and competition in the term life insurance space has meant that products have been designed specifically for expats. And of course, the price point that term can hit is always going to be attractive to anybody looking for some substantial cover.
Yeah, I think in all honesty, a lot of the clients that come to us looking for insurance, the first thing they ask for is health insurance, because obviously nearly everybody across Southeast Asia needs that. But then they do start asking the questions about the life insurance. And I think you're right in what you're saying, is that most people will go for the standalone because of the affordability of the whole of life. But I do think whole of life does hold a place in the market, and we do have a lot of clients that show interest in that, simply because sometimes people look at it as insurance as a waste of money. Now, obviously, we both know that insurance isn't a waste of money, and it is something that you need to have in your portfolio. But as it can look like, sometimes it is just money every month, and if you don't die over that time. But it was interesting to hear you say then that actually you can have the cover up until you're 99. Is that correct?
Yes. Traditionally term insurance has been a product that it's going to cover you for maybe 25, 30 years tops. But as I say, there have been huge developments in the life insurance sector, especially in the offshore market, where now term insurers like ourselves, we can offer to cover clients up to age 99. Now, look, that's strictly not a whole of life product. However, for a 45-year-old, 50-year-old taking out, a substantial amount of cover, whether it 2, 3, 4 million US dollars, it could be a whole of life contract. You just don't know. But like I say, look, each family has its own, unique challenges, and there isn't a one size fits all. So you mentioned, about whole of life. Look, it does have its place. It certainly does, and some policies, may appeal to a certain dynamic, a certain nationality over other products. You're quite right in the fact that, especially in Asia, local Asians do like a little bit more of a challenging product and like a little bit more of an investment side to it. So yeah, both, do have their own place in the market. But I would, reaffirm, I think that for expats in particular, I think that, term life is pretty much the go-to product.
Yeah, I think I would agree with that as well. Now, you've obviously gone over a lot of reasons there why you would have health insurance, but from my experience with meeting people over the last 15 plus years, a lot of people avoid life insurance.
Yeah.
Why is that?
Well, good question, really. I would say, well, again, if I answer that in a slightly different manner, I think if myself and you, Michael, go into any, expat city expat district in any city in Asia, and we walked into a coffee shop or we walked into a bar, and we asked the long-term expats up there to hold their hands up and say, look, if you've got solid life insurance in place, please keep your hands up. I reckon, Michael, at least 60 to 70% of those clientele probably don't have relevant life cover in place. And that's probably a conservative estimate as well. Probably out of those 70%, out of those 70%, I'd probably say that most of them have actually thought about it and think it's a good idea.
Yeah, I agree. Why would you say that is, though?
I think it's a number of different factors. The two that stand out straight away are it's not going to happen to me syndrome. We hear that a lot. Obviously, myself and yourself, working in the industry, our experience tells a completely different story. And, just simply thinking it's not going to happen and burying your head in the sand, well, that's not really solid advice going forward. There's also optimism bias where, you're young, you're healthy, you're fit. Do I need protection? Do I need cover? Well, actually, that is the best time to purchase life insurance when you're young, when you're healthy and fit, because first of all, premiums are going to be much cheaper. They're going to be much easier to manage. Secondly, from an underwriting perspective, it's going to be much easier to get you on risk. And there is a cost of delay. If you do decide, right, okay, yeah, I understand this, I think it's a great idea, but I'm going to wait 10 years. Well, there is a cost of that delay. First and foremost, your premiums are going to be higher. And second of all, it could be a much more complicated underwriting process. Healthy competition in the market as well, as I've said, between insurers, I think also comes into play here as well, because products have developed a lot over the course of the last 5 to 10 years. And long-term expats that may have dipped the toe in the water over, 10, 15 years ago to see what products are available and saw that, options were very, very limited, might not just know that these products now exist due to their expat status.
Now, you've mentioned expat status there. What if a client has already purchased something in their home country, whether it be for the mortgage or for the family?
Yeah. Well, look, domestic policies are essentially designed to cover you at home. They're not designed to cover you if you were to travel overseas and become tax resident in another country. Now, there isn't really a 100% solid answer to this question, Michael. The reason behind that is because each domestic insurer will have its own unique approach to what happens if our policyholders move overseas. Now, The best thing to do and the best piece of advice that I can give at this stage would be to contact your onshore provider and ask them to put it in writing that if a claim were to be levied from, say, Thailand or Vietnam or Malaysia or Indonesia, look, they're actually going to settle that claim. We had a scenario and we helped a client out a couple of years back that was in that exact situation. It was a UK national that had a policy with a very high profile UK life insurance company. And for 9 years, he was paying into the policy until an advisor sat him down and said, you need to contact these guys and make sure that they'll settle a claim. Now, they were actually sending the renewals, Michael, to his Vietnam address. Can you believe it? And they wouldn't put it in writing that a claim would have been paid. And essentially, the client had to cancel his policy. Now, that's twofold issues for that particular client. One, 9 years of wasted premiums. But two, they're 9 years older. Premiums are going to be much more expensive than they would have been if he would have cancelled that policy when he set up shop in Vietnam.
I mean, it's crazy to hear that insurance companies in the UK are happy to take your money, knowing full well that they're not covering you.
Yeah,
But
not always the case. Like I say,
yeah,
you can have situations where a UK onshore provider will actually cover you overseas, but it's best to know. It's best to find out. We don't like surprises in the insurance industry, and I'm sure a client wouldn't like, or a beneficiary wouldn't like, the surprise of the non-fulfillment of a claim.
of course. And I've had the same conversation with most of my clients in the first meeting when they discuss they have insurance in the UK. The first thing I do say to them is do just make sure that fully covers you whilst you're abroad. Now, we've
Exactly.
mentioned a little bit there about personal insurance, but what about if people are already covered by a company scheme? Do they still need personal cover?
Um, I'd say so, yeah. I mean, look, group schemes are great. The benefits that group schemes offer employees are absolutely fantastic. However, it can leave an employee or a potential policyholder in a state of false sense of security, um, because they think they're covered. Oh, I'm covered through my company. My cover company's me. I'm all right. They take care of me. Look, that's great. But realistically, your cover on a group scheme is going to be anywhere between 2 to 4 times salary. Is that enough? Realistically, if I were to turn around to, any of your clients, Michael, and pose the question, okay, if you got 3 years salary up front tomorrow, could you comfortably retire? The kids, if they got education needs, if you got mortgage to pay, you've obviously got ongoing lifestyle that you need to keep up. So, look, they're great for companies and they're great for employees, but just check and make sure that, you are adequately protected, because 2 to 4 times cover doesn't necessarily seem to me like it would be the optimum level of cover. I think if you also look at it from a different perspective as well, if that same client's 40 years old, for example, and they work in the same job for the next 15 years to take them to 55. At 55, they decide they want a new challenge. What's to say that the next company is going to offer the same benefit? You can't say that. So I would always recommend that, clients take out a private policy as well, because in that circumstance that I just mentioned, the client being 55, best case scenario, his premiums are going to be much more expensive than they were 15 years ago. Worst case scenario, a lot can happen in 15 years. And if the client is diagnosed with a potential issue or an illness, it's going to have a major impact on his insurability and could have an impact on the premiums. Premiums could be loaded. They're always already going to be more expensive. But worst case scenario, the client could actually be rejected due to that pre-existing condition.
Yeah, I agree. I think you should definitely be setting up some form of life insurance outside of your company, because essentially your life is going to go on a lot longer than you're going to work for that company. So it's better to be prepared than not to be prepared.
Sure.
You mentioned their company policies would maybe offer 2 to 4 times salary. What's your recommendation for a life insurance? How much should people be covered for?
Okay, well, I mean, as I said earlier, there isn't really a one size fits all scenario for life insurance. However, I think, you can work out how much a client needs based around certain certain client, how do I put it? So if your client's 40 years old, obviously there's going to be specific needs there. If your client's 55 years old, it's going to be slightly different needs. So the first thing that I would look at is to say, right, okay, well, when do you want to retire? If the client's 40 years old, wants to retire at 65, well, if something happens tomorrow, you're losing 25 years of income there. What I would suggest is probably a good starting point would be anywhere between 10 to 15, and then add on certain other elements like future financial commitments. Do you have children? How much is that education going to cost in the future? That needs to be taken care of. Um, you know, Ongoing mortgage payments, any debts or loans that an individual might have, or even a company might have, needs to be taken into consideration. So, as I say, there's not a one size fits all, but that's where the beauty of working with an advisor comes into practice, Michael, because they can sit down and work this out with you. I think one of the major mistakes that clients make or individuals make when they're taking cover, maybe direct from an insurer, is they just pluck a number out of the air and say, "Well, that sounds enough," or $1 million. Oh, that sounds more than enough. Well, it might be. You might be overpaying it. You might not need that amount of cover. Um, on the other side of the fence, might not be enough. So it is very important that you sit down, I would say, with a professional advisor that can give you that advice.
I agree. Um, Now, obviously, we're talking about getting the right advice and making sure you're
Sure.
setting up the policy properly. But what should people really look out for when they're buying life insurance?
Okay. Well, I mean, I've touched on the first one there, really, but I mean, like any financial product, you need to make sure it's suitable. You need to make sure it's suitable for your particular circumstance. Number one, I would say, is the point I made in the previous question is seek the services of an advisor. They've researched the market, they've done the due diligence on the companies. They're going to know which product is maybe offering a sweet spot with regard to age or sum assured. They've done the hard work, but it's not just all about purchasing the insurance, Michael. It's the ongoing advice that an advisor is going to give you. If you move address, your advisor is going to contact us and tell us that. If you need to decrease your cover, again, the advisor is going to be well positioned to have a connection with us that will then, be able to update your policy as it's needed. And of course, at the actual claim stage, if it does come to that, surely you would want somebody holding your hand that's been through this situation before, which can provide the ongoing advice, which is going to make the claim run much, much smoother and going to put you in a much better, state of mind in such a difficult situation. Other things that I think are very important is assessing your needs. Make sure you do have the right amount of cover. I've touched on that in terms of, don't just pull a figure out of the air. Be 100% honest at the application stage. Might be difficult, but you should be totally honest with us. In the health and lifestyle questions, we do it for a reason. We want to make sure that that person is insurable. If you're not answering questions correctly, all it's going to do is delay a potential claim, or maybe even, if you've broken the terms and conditions of the policy, mean that we can't fulfill payment of that claim. I think another big thing is understand what you're buying. I think a lot of the issues, or let's say the preconceived ideas that members of the general public have about life insurance, are because people don't know what they've bought. The insurer's been very clear about what they've got here. The person thinks they've bought that, and there's a disconnect between the two. And the person's never ever going to turn around and say, "Oh, it's my fault. I didn't realize I wasn't purchasing that." It's always going to be leveled at the insurer. Now, look, we always want to pay claims. Of course we do. It's the best piece of marketing that a life insurance company can do, is to fulfill the payment of a claim in a structured manner. So understand, know what you're purchasing, look at the terms and conditions of the policies, look what's covered, look what's not covered. And again, I'll go back to that first point. your advisor is going to understand that and put it in a way to you, sorry, and position it in a way that's jargon free and easy for you to stomach and understand. I'd also say compare providers. Don't just go with the first option, but also don't skimp on cost. Remember the reason you're purchasing the insurance in the first place. You're purchasing it essentially as a safety net or a parachute for your family. If that analogy was actually real and your family's jumping out of a plane, would you really shop around for the cheapest parachute? Or would you want to go with something that's been tried, tested, used in the past with, your advisor? I think it's probably going to be the latter. But yeah, those are the main points that I would say when you're, looking out for purchasing life insurance. But there are red flags as well, and things to maybe look out for and, avoid, let's say. The big one for me, and look, I'm a little bit old school, but if a life insurance company is offering to accept you on risk with zero medical underwriting, that's a big red flag. As an insurer, I can say that we have to ask certain questions before we're able to fulfill the settlement of a claim. Now, if you've just moved on risk without being medically underwritten, it means that those underwriting questions are going to come at the end. What's the point in that? Imagine asking a grieving wife about their husband's childhood asthma. It's a pointless situation. So if we're medically underwriting a client at the outset, it means that we've overcoming all those underwriting issues at the very start. And it means that the claim setup and system is going to be ultra clean, ultra smooth. And that's what you want. You might go through a few headaches to sit a medical, but surely it's better to do that today than present those issues to your family at the claim stage.
Yeah, I mean, I agree with that. Even if the medical underwriting is questionnaire, at least it's something rather than nothing, because the last thing you want, as you said, is someone's smoke coming up because someone's died and they won't pay the claim. So I totally agree. And it is, as Michael says, very good to sit down with your advisor and discuss this, because they will put you, for your situation, in front of the right provider to make sure that you are getting the right cover for you. I think we've gone into a lot of detail there, and I can see we've already got some questions in the Q&A box. But just before we move on to that, I do just want to thank Michael and all of you for joining us today. I hope it's been really helpful and informative. Now, if you would like to know how we can help, or you want to ask any more personal questions, please feel free to scan the QR code that I am now going to share on my screen, or feel free to send me an email on the email address that you'll see below. I'm just sharing my screen. One moment. As I said, feel free to reach out to us. We are here to help. And if Atlas Life and Michael are the right company for you, of course, we will send you to them. Now, don't forget to join us for part 3 of the series, which is next Thursday, the 5th of March, where Michael's touched on it a little bit today, but we will be going into a lot more detail about whole of life insurance. Right, onto the Q&A. I can see in the box here that we've had some questions about whole of life. I'm not going to put them to Michael today because he's here to discuss life insurance. What I will do, though, is they will go in the Q&A section for next week. So please come into the whole of life webinar next week and we'll answer all those questions there. So some of these questions you have already answered, Michael, because I can see them in front of me. The first question is, does it cover me everywhere?
Okay, within reason, yes. So if you were to take out a policy, well, all policies with Atlas are actually portable. Now, what portable means is that if your circumstances change and you're not based in the country where you actually applied and took the policy out, the policy is designed to move with you. Obviously, there are regions and countries in the world that are war-torn countries, and unfortunately, we wouldn't be able to extend coverage to these places. There isn't generally a list that we can provide on that front, but it would be your typical highly volatile countries where a lion's share of people are not going to be going on holiday, put it that way, Michael.
Yeah.
So yes, it is portable. It's designed to follow you where you go. If you're a British expat, an Australian expat, an American expat in particular, if you move back to your home country, it's designed to follow you, which means that you can still you can still send premiums, and any claim would be settled in your new location.
That's great. The next question is, can I get cover for my wife and kids? I'm assuming the person who's asked this means, can it be on one policy?
Okay. You can for the wife or partner, absolutely no issue. However, I would go along the advice of keeping a husband and wife policies separate. Now, there is a reason for that, and that might be just down to Atlas and the way that we look at things. It might be different with other product providers, but as far as Atlas are concerned, we don't really see any benefit of, say, a joint life first death policy. The reason being is you get maybe between a 10 to 15% discount on the premium to have your husband and wife or partner on the same policy. And in the occasion of the first person dying, a cash settlement is sent to the surviving person on the policy. However, for an extra 10 to 15%, if you're looking at, say, $1 million as the sum assured, you're actually doubling the amount of cover for a very, very small extra amount of premium. So, if you look at, you're essentially getting an extra $1 million coverage for 10% or 15% more of the premium that you currently settle, it makes total sense to keep it separate. With regard to children, I'm afraid that we can't actually accept anybody under the age of 18. So children would be a no from us.
Next question is, if I smoke and don't declare it, will I still be covered? I'm sure you've had this a few times because I have.
Yeah. Again, this is something that does get read on a frequent basis. Look, essentially, if you're a smoker and you say you're not a smoker, you could be in a sticky situation at the claim stage. You are essentially, breaking the terms and conditions of the policy. However, our underwriting is quite strong. So, for everybody that says they're a non-smoker at the underwriting stage, i.e. when a client is moving on risk, we are going to ask them to complete what's known as a cotinine test. So the cotinine test will actually show us whether you're a smoker or not. So that does weed out, I would say, 99% of those circumstances where, a client has said that they're a non-smoker, but actually, they do smoke. And also the clarifications for being a smoker and a non-smoker are quite strict. If you were one of the social smokers that doesn't go out and buy cigarettes, but stands outside in the smoking section, terrorizing your mates for a couple of cigarettes after a few pints on a Friday. Look, as far as we're concerned, you're a smoker. You actually smoke. So, that again should be taken into consideration. E-cigarettes, vaping, also classified as smokers. However, let's just say that clients are incredibly honest. They tell us that they're smokers. Obviously, smoker rates are a little bit higher than non-smoker rates. But if in the future they decide that they're having a lifestyle change, they stop smoking, we can actually move them onto non-smoker rates after 12 months of that. So, and the premium will fall on to non-smoker rates, which is probably about 40% cheaper. So again, I will go back to one of the things I said about what to look out for when you're taking out life insurance. What we want is honesty. And if you are a smoker, look, please be honest about it.
Yeah, no, I totally agree. I'm going to skip the next question because I'll come back to it. But can I get cover if I have an illness or other diseases?
Yes. I mean, it's a bit of a broad-ranging question, but I'll try to give it an answer and not do a Keir Starmer and just go straight over and not give an actual answer back. Not just Keir Starmer, by the way, but all politicians. Dependent on what you've been diagnosed with, yes, a majority of time you would be able to get cover. If it's not life-threatening conditions, if it's not something like an aggressive form of cancer, we should be able to accept a client on risk. However, there would be quite a detailed loading that's put onto your premium for that. Now, obviously, I can't go through every single potential diagnosis. That would take me all day. But we have accepted clients that have been diagnosed with cancer that are in remission. We have accepted them on risk. So best thing to do is be honest on an application form. Let us understand what the diagnosis is, and then we can, potentially offer a bespoke policy, which is obviously going to cover that condition. But be honest, as I say, and let us know what the issue is so that we can try and offer a solution to the condition that you have. Not the condition, but a life insurance solution, which encompasses the issue that the potential policy holder may have.
Yeah, I think a good thing there is honesty is the best policy when it comes to insurance.
Yeah, we don't like surprises.
Yeah, I think, and I always will promote clients to be as honest as possible, because it will be found out. So it's best to be honest, especially if using a company like Atlas Life and you do smoke and then you stop smoking. As Michael said, 12 months later, we can take that off, which will reduce your cost. So it is best to be honest. Now, the last question is, how do I get a quote? So I'll take that one. So it's very simple to get a quote. Just reach out to me. As I mentioned, my email address is there, or scan the QR code, and that will take you automatically to booking a meeting with me in my diary. We'll be able to discuss exactly what your needs are. And then from there, depending on who I think is best for you, I will go out and get you some quotes, and then we can sit down and discuss what quote is best for you. Hopefully it will be with Michael, because now you've met him, it's easier to work with someone but obviously it's all dependent on your situation. Right, that's it, guys. Once again, thank you very much for joining us.